Hello again, and welcome back to another trading video. Now, I got ChatGPT to make me these nice stats, so I am trusting it that it is correct, but I know that it is roughly the numbers I've worked out elsewhere, so I have high confidence in that. And so, yeah, so let's have a look at some of the trades that I took this week, because really it's just one oversized loser where I physically stepped away, and that was what caused the biggest problems. So I'm not going to look at all of these, but the week overall has been a lot of short-term scalps. You can see $30 there, $67 there, $40 there, blah, 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 80 there, and oof. So let's just have a look at this hood trade before we do anything else. So let's go to hood and let's just look at the D1. So it's a relatively flat bit of bull, but it's rolled over a bit. The poor man's one-off has got a bearish cross, although I was not using the poor man's one-off during the week's trading. So this is a new thing for me, which just sort of as a side interest compares relatively well with the real one-off. So like there's December the 10th and there's December the 10th. And there's December the 24th, and here's December the 24th, and here's January the 20th, and well, yeah, here's January the 20th. So perfect, heavens no, but yeah, this is the poor man's one-off is an indicator that I'm going to be using starting next week because the one-off free trial is only for 2 weeks, and also that's the 6th of February, and this is the 6th of February. And that's the 20th of February, and that's the 25th of February. So you see how that was like 20th. So that's when the real one-up crossed. Oh, 23rd, sorry. That's when the real one-up crossed, and this is when mine crossed. So, poor man's one-up. So let's have a look at the trade. So this is the trade. So over here, I made a quick scalp on Monday. This was just a small scalp with a profit. And over here was where I made a nice losing trade. And what happened here was I did a quick scalp up here, which got me about $60. You see here, that was this trade. And then what happened was I thought, that's great, let's re-enter it. At the time, we had a vaguely bullish looking market, although with this turnaround. And I thought, yeah, let's re-enter. And so somewhere in here, I re-entered. And obviously it went down, and I didn't actually mark it, but I exited somewhere in here. It doesn't really matter too much. The point is it was a loss, and it never recovered, so exiting was the right choice. The big mistake here was I just physically stepped away from the computer. I thought, oh, this is good, and oh, it's only paper trading anyway. So I've learned the lesson that I should always watch my trades, and if I need to step away, then I need to exit the trade. Let's just have a quick look at GLW because that was a cool trade. So GLW, have I marked where the trade happened? Yes, in here. So I believe at this point in time I had started using the poor man's one-up because I remember some of the exiting because of the cross. So you can see this was nice. So it was below AV wrap B, and going through the cloud and all. Really, I should have waited for it to break all the way through because that kind of acts as support there. But looking at this trade in here, then you can see I saw it going down a lot. Bearish TSI, this is the iMacD, all that fun stuff. And I had a little pullback in here, and I thought, well, I'll enter just after the pullback. And yeah, and you can see here how the poor man's one-up agreed with us and crossed back bearishly. But then we had that bullish poor man's one-up cross. We had the TSI cross, and so therefore that was not a trade I wanted to stay in, so I exited, and also didn't really like the market. So that was a good profit. And let's pick one more. Let's go for TXN, just because that's a nice $40 profit. TXN. So yeah, once again, where was the trade in here? That was, oh, I see. Yes, this was a sort of end of day scalp. It was a scalp. I don't know, but it was an end of day sort of attempt to capitalize on this bearish price action. And again, what I could see was that the poor man's one-op started being a bit more bullish, and even though the TSI was still bearish at the time and the unbalanced volume was still bearish, then I didn't like, I didn't like the bullish poor man's one-op, so I exited all the way down here on this nice wick tail, whatever you call it, and that was a good trade. But ideally, I want to be making these trades longer, so I'm well aware of the problems with a lot of these trades. They're too short term. They're too sort of rushed. I'm exiting well, but I could enter better. So shall I have a look at one more? Let's go for FCX. FCX. Oh, and here again, this was I had quite a bearish thesis this day for the market. It was down. It was looking bearish. If you look at these SPY candles here, they were looking quite bearish, but no, it reversed on us. So, and again, you can see that in the poor man's one-op here. Just to compare this against the real one-op, then where's FCX? FCX. There it is. Then now let's go to the M5. And what date was this? Tuesday, Friday, Thursday, Wednesday, Tuesday. So that was in here. And you can see again here that the real one-op was bearish from the get-go, whereas ours was bullish and sort of curved around to be bearish. And then it crossed over at 9, which in OneOption is 10. So crossed over here. And then you can see how it crossed back under at 9:30, which is 10:30 here. So OneOp's actually a bit more bullish than this. And then 9:55 here and 10:55 is there. So OneOp says a bit more bullish to go, whereas mine says, oh, we're crossing back to being bear. And indeed, it turned out to be a pretty marginal, boring day. So yeah, I entered a put here, I exited here, I made a little scalp. And again, this to me just emphasizes the sort of difficulty in the market direction. If we just have a look at SPY, you can see that it's a difficult few candles, and what's kind of happened is that you start this day and you think, oh, it's looking, well, a bit neutral, it's range bound really, but you think, oh, it's going to break the SMA 50. No, it doesn't. You know, you think, oh, we've gapped down, we can get long now. No, the SMA 100's there. Oh, can we get short? No, well, that day it did nothing. Oh, next day. Oh, look, we're back in the previous day's range. So the whole market has just been doing a whole load of fuck all, really. Again, this has been coming down, and you think, oh, nice trend day. But look at all these sort of fake outs here. This was quite a difficult day to trade because although it was bearish, you see it reversed at the end of the day and came bullish again. And then again, this just had almost no price action at all on Friday. So it's very difficult to have a market thesis, a market direction. Obviously, the idea is to pick stocks that are strong or weak. If the market is flat, you lean on the stock, and that's okay. You see like here, a weak stock, consistent relative weakness. Adobe's been quite strong. Look at some of this relative strength. So yeah, we will see. We'll see how things go. But I think my big lessons from this are to not step away from any trades. If I need to physically leave, then I just need to exit the trade. No matter where it is, hopefully in profit, which might leave profit on the table. And also the exits are good. It's just the entries. Ideally, I want to be taking longer trades that are hours rather than minutes. But I also need to be prepared to exit trades very quickly and take profit. Cool. So yeah, that is everything today. Thank you very much for watching, and I will see you. Oh, and just a quick final note, settled cash is being a bit of a bastard. So I did exceed settled cash a couple of times, so I'm aware that that's a bit of a, means that I wouldn't have been able to take some of these trades if it was a real account. So again, that's kind of a slight problem. Anyway, thank you very much for watching, and I will see you next time. Bye-bye.